Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the most bullish scenario where the low is in and we are looking for an impulsive structure to the upside where also preferably your wave 2 is now finished. The common target area for your wave 2 is the golden pocket to the 786 Fibonacci, taken from the low to the high of this wave 1, giving you a target area between 62.5k and 61.2k. Inside this wave 2, we are then looking for a double zigzag to the downside in an ABC wave W, complex sideways double combo in a wave X with a flat in wave W and a zigzag in wave Y, to then have a final zigzag ABC to the downside in this wave Y, reaching the target for wave Y being the 0.618 taken from the high to the low of W to the high of wave X. If we then zoom in to this final structure to the downside here and explain why the probabilities have increased for that low to now be the low and for price to move towards the upside, it's all because of the 0.618 that's been touched now. So if we look for an ABC to the downside to finish wave Y and therefore wave 2, then what we're looking for in wave C is a 5-wave structure, a 1, 2, 3, 4, 5-wave move. However, wave 4 is not allowed to hit the 0.618, which is the case if you take a fib from the high to the low over here, so that invalidates a wave 4, increasing the probabilities that the low of your wave C is in, and you're going to be looking for price to move towards the upside. Now that therefore means that on the 3-minute time frame, we're looking for impulsive structures to the upside. Here have a 1, 2, 3, 4 grind to the upside in wave 5, finishing this wave 1, and then preferably seeing price drop towards the downside towards the target area for your wave 2. The common target area for your wave 2 is the yellow box here between the 0.5 and the 786. Taken from the low to the high of this wave 1, giving you a target area between 62.4k and 62k. An uncommon target for a wave 2, but a target nonetheless, is the 382 Fibonacci at 62.6k, and the 886 is incredibly rare, and preferably we do not touch it for a wave 2. After this wave 2, we then want to look for impulsive continuation in a wave 3. If we zoom out once more and go to the short-term bullish but eventually bearish scenario, as in this scenario we do see the lows over here taken, we are looking for a bigger zigzag to the downside in a wave A, B, and then a wave C. Bettina in Discord shared this diagonal structure, which actually works very nicely indeed, especially in combination with the 886 taken from the high to the low of this wave A, B, and then a wave C, because the 886 is a common target for a wave B or a wave X, and it is a rare target for a wave 2. So preferably we label this high over here as a wave B to then create an A, B, C to the downside in your wave 1 for a leading diagonal in a wave A, where we then have a 2, 3, 4, and eventually a wave 5. After the low over here at wave A, we are then looking for a 3-wave corrective structure to the upside in a wave B. The common target area for your wave B is taken from the start to the end of this wave A, being the 382 to the 886 for a wave B, which of course is a very big area. So what is very important is the subdegree of this wave B. What are the subdegree waves here going to be, so that we can get a better idea of where we're going to end. Target area 63.8k to 66.6k, and in this area luckily we do have a nice bit of resistance. First of all, the 382 here, 63.7k to 63.9k, and then a little bit higher here, the other blue box, 65.2k to 65.8k. After this 3-wave move to the upside in wave B, we're then looking for a wave C towards the downside, and wave C should be an impulsive structure, 1, 2, 3, 4, 5, taking the low over here preferably. Now that means that on the 15-minute time frame locally, we are preferably looking for 3-wave structures to the upside, even though the impulse on such a low time frame is a possibility, a wave 1, 2, 3, 4, 5, to finish wave A, then get a correction in a wave B, and eventually a wave C to the upside to finish the blue wave B that I've just shown. So that is a possibility, but the even more bearish scenario is actually that this is just a wave A. We then look for a B and a wave C. Common target area for your wave B is the 886 to the 382, taken from the low to the high of A, 62.6k to 61.9k, after which we want to see a wave C to the upside to take the highs. The bearish scenario, where the low is not yet in, is a double zigzag. So we have our A, B, C in wave W, our WXY inside wave X, and then this is only your A. You look for a B and another move to the downside in a wave C to then finish your Y a little bit lower. Now in this scenario, we then have a finished 5-wave structure to the downside in a wave A. We want to see a 3-wave move to the upside in wave B, and then a wave C towards the downside. So this is important. If price is just going to move straight towards the upside, we look for higher, because for this wave B, we want to see at least a 3-wave structure, and based on this move to the upside, preferably it's a zigzag in a wave A, B, and then a wave C, after which we want to see price moving down. Common target area for your wave B is the 05 to the 886, taken from the high of X to the low of this wave A over here, giving you a target between 63k and 64k. When we look at the CVD divergences, we do have some bullish CVD divergences on the 1 hour time frame over here, higher low in price, lower low on the CVD. However, it is preferred that we also see some local strength on the 5 or 15 minute time frame, and at the moment we don't yet see anything. So we have to be patient locally and see if we get some more proof of support. So if you then look at the probabilities of the different scenarios, then on the 1 hour time frame, the probabilities at the moment are highest for a bit of a bounce towards the upside in the 2 more bullish scenarios, where we are looking for price to move towards the upside here in either a wave 2 finished and a wave 3 towards the upside, or we're looking for a bigger zigzag in a wave A, a bigger B, and then a wave C towards the downside. On the 15-minute time frame, preferably price is gonna drop a little bit more towards the downside inside the target areas that I've shown, before then a continuation to the upside. I hope that this video was helpful and valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.